Welcome back, it's me Adam and you're watching Unlimited Options Investing. Happy New Year everyone, and in this video we're going to be talking about my top picks for dividend stocks in 2022. So there are three types of stocks out there: growth stocks, value stocks, and dividend stocks. Usually the dividend stocks end up being value stocks as those companies are aggressively trying to grow, so they take their profits and they reinvest in themselves. Whereas with a value company, oftentimes these companies are more established, whereas value companies are more often predictable with their financials. I don't really invest in too many dividend companies, but some of the companies in my portfolio that are growth companies primarily also pay out dividends. Think Apple and Microsoft. And in this video, I'm going to be referencing a lot the ETF VIG, which is Vanguard's, I believe it's Appreciation Dividend ETF. It's actually one of my two favorite value ETFs, which I talked about in a previous video, which I am going to link below into the description. And the reason I'm such a fan of that ETF specifically is because it's full of high quality names that are year over year increasing their dividend. And you get some good diversity in there, not to mention it is a low cost index ETF. But specifically in the video, we'll look at a few specific stocks. Otherwise, if this is your first time stumbling upon the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button and let's get started. All right, we have the Vanguard Dividend Appreciation ETF, VIG. So number one, we have Microsoft at 5%, and then you have Home Depot, JP Morgan Chase, United Health Group, J&J, all at about 3.5%, and then Procter & Gamble, not too far behind at 3%, Visa at 2.63%, Costco 2%, Broadcom, Abbott Laboratories, Pepsi, Nike, Coca-Cola, Qualcomm, Walmart, McDonald's. So all high quality names. Next Era Energy, Union Pacific. And the list goes on. You have UPS, Starbucks, Target. And what you'll notice is that there actually aren't any energy companies. I missed out on that trade this year, but because I think there's a lot of uncertainty with these oil energy companies into the upcoming decade, and they're not companies I want to invest in. So there are other ETFs with a ton of energy companies, Chevron, ExxonMobil. That's why I'm a fan of this specific ETF, because it's all high quality names, increasing their dividends. They're still defensive but growth companies at the same time. They're blue chip companies. All right, so the first company here we have Microsoft. This isn't like your pure play dividend play, but yes, it does pay a dividend alongside with Apple, and it's not very much, 0.5% for Apple as a dividend yield and 0.74% for Microsoft. With these companies increasing dividends year over year and also buying back their stock every so often. And yeah, of course we know the capital appreciation with both of these companies. What people don't think of is not only is the equity going up, but the lower you bought either one of these companies, your yield is actually that much higher for yourself. You lock in the dividend yield when you buy shares of that stock. So for example, if you were to buy Apple today, you'd be locking in this dividend yield. Of course, pending further increases. That's the beauty of long-term compound investing, holding your companies for years. I'm not going to get too much in depth of Apple or Microsoft. I talk about them every other video. But yes, they do pay dividends. The next one being Home Depot stock. And I'm going to group this one with Costco stock as well. They're both big box retailers. They've both been on absolute runs over the past year and a half. If we look at Costco actually over the past year, it's up 48%, and Home Depot over the past year is up 47%. So they've both performed very well. Home Depot with a market cap of $414 billion and Costco at $244 billion. Costco is a stock that I did mention on the channel a year ago, and I did not hold on to my shares. I wish that I did. Costco with a dividend yield of 0.57% and Home Depot at 1.66%. I'm going to link below in the description the video I did on Costco and how their business model works in terms of how they make their money and their profits. It's actually pretty interesting. They make the bulk of their profits from memberships and barely make any money on their products. At times actually selling for less for what they bought them for. And Home Depot, anything to do with homes these days, with home prices going up, everyone's staying at home more often than going out. Home Depot is still finding a way to grind on higher and higher, and there's no reason to think they can't continue that going into the future. Though again, with these two stocks, because they've gone up so much this past year, I would feel a lot more comfortable if I was buying them on a pullback. I'd rather buy them down 3, 5, 7, 10% down from their all-time highs. I would even consider Lowe's and Target as well. That's why I like, again, VIG so much. It's a good mix of a lot of high-quality companies. You can't go wrong really with any of them. So next up is JP Morgan Chase. Yields a dividend of 2.54% annually. In my opinion, and widely considered to be the best bank in America. Also the biggest at $464 billion in market cap. And looking over the last 6 months, it's only up about 2%. Or less sideways, this is one of the companies I'm investing into 2022, especially with interest rates set to go up. Banks being the biggest beneficiary of that. And a good way to diversify into the sector. Another way also through Visa or MasterCard, even though you would be getting a smaller dividend at 0.69%. This one also over the last 6 months is down 7.46%. A huge market cap of $456 billion. The MasterCard, they're not going anywhere. They own so much share of the financial networks across the globe. Not to mention they're a name that everyone knows and trusts since pretty much I can remember. Lastly, I'm also looking at Nike stock, this one yielding a dividend of 0.74% annually. Over the last 6 months, we are up 8.74%. This one is a little bit more volatile than the rest of the stocks. I'm looking again to get into Nike as well as the rest of these companies. I have my JP Morgan Chase, but getting into Home Depot and Costco, I'm looking for weakness and entry points, and I don't need to get into them, but I would really appreciate it if they went down in the short term. All right, and that's the end of my video. Thank you very much for watching. As always, let me know in the comments below, are you investing or trading any of these companies? Let me know. As always, subscribe and like, and I'll see you in tomorrow's video.